Scale, exit, repeat. Patterns behind repeat wins. This is a very exciting topic that we have today because this is the topic that we're talking about today really matches the book Start, Scale, Exit, Repeat. I'm happy to announce it won another award, our 39th award, the International Press Award in New York City there. And we've been celebrating that, and we're actually heading to some of the award ceremonies later this year to collect the awards. But today's show, patterns behind repeat startup wins. But Michelle, what are you thinking about today's show and how startups can think about starting, scaling, exiting, and repeating?
All right, that's a loaded question, my friend.
That's a question I
You
love.
know,
Obviously, I love the question, right?
I know, it's so big. Like, where do I start? Right? I think we start. That's good. We start with hearing what other people have done that works, because you know what? I think what we do know, Colin, painfully so. I'm going to just say is, I see this starts with patterns, but wow, it's really hard because there's so many different ways and there's so many variables. Like really trying to suss out what the patterns are or what the questions are or how to approach it. Like that's what we need to focus on. So I'm
Well, I guess
excited.
I mean, you really have to ask the question: is there an actual formula? Like,
Right.
is there a
I'm
formula to build
I'm
wealth?
wondering. I'm
And if there's
wondering, like, I just want a checklist, like, you know what I mean? So I'm really interested to hear from folks like yourself and our guests that's coming up, like, is there a pattern, is there a checklist, can you make it easy on me, like, help me please.
Well, obviously we wrote the book Start, Scale, Exit, Repeat, and the Start Guide, which has a very detailed checklist. We've also been working on the Scale Guide, which is going to come out later this year, probably in March. I think we're looking at a March release date for that one. And entrepreneurship is something that is instinctual. It is something that people do in an ad hoc way, and that's how generally they get started. But there is a formula for success. There is a methodology that you can follow that can help you become successful if you follow that methodology. But I wanted to also say, if you're in the audience and you've understood a few patterns, you've identified some secret sauce that you would like to share with us, please raise your hand and come join us on stage. Okay. We are a show that tries to crack the code of what it takes to be a serial entrepreneur, what it takes to succeed as an entrepreneur. And we believe there is a formula. And I'm not saying there's an AI for that, but I am saying that there is an algorithm for that. And I do think that the learning that algorithm and understanding it and understanding others like David Gardner who've done this before, how you can succeed at your business, that's the key. Michelle, I know that we've used a lot of the tactics, methodologies, and Start, Scale, Exit, Repeat to scale paw.com and to scale.club. We had a successful exit with GoDaddy. Maybe you can talk about that story a little bit, about how what you sort of learned with .club, and the goal setting and the strategic planning and the things that we did there that helped result in such a successful exit to GoDaddy.
Yeah, I guess that's the lesson, right? Is, how do you plan for this, right? And you know what, a lot of people will be like, oh, I want to be, a unicorn or whatnot. Like, that's not what I'm talking about here right now. We're literally talking about, like, how do you help give everyone around you and your investors confidence and structure? That's the harder part, Colin. Okay. Like, of course, we're always looking for this like massively successful idea, but we're talking like you think you're past that, whatever. But how do you like turn the ship, the Titanic, to be successful? And more importantly, adjust as needed. And, for us, what we found that is we have a system that we use. Okay, we don't sell this system. This is not a commercial or anything like this. This is actually a system that we use and that is proven. We use quarterly goal settings and we do weekly meetings and then we, have annual planning. I personally have found that invaluable, even though we don't do it like very strictly, like some companies do. We're not like down to the detail. We tend to be higher level. And, it's this whole methodology around also like what are the goals, right? So your goals have to be very quantifiable and, hopefully achievable. And it is like red, green, yellow. Sounds basic, Colin, but for me, just laying that out and having people agree was extremely, extremely valuable. And I think the people around us appreciate that too. Like, I think, all of us want to know, like, what do we need to do to, feel like we're performing our job to be successful, what does success actually means? Because I think you find out pretty quickly that people's ideas vary very greatly based on that. And Colin, and then I would just add like that kind of like weekly check-in is where people really need to bring to the table where they're struggling. More so where you're struggling than, hey, here's what I did, right? Because that's how you get help and how we prevent problems and adjust. It's not, oh gosh, there's this goal and I just have to do this and only this. It's not that. It's not like that at all, right? We're still trying to think of other ideas. We're still helping each other. We're letting other people know where we think there's like issues. Like that's where it's at. It's communication. I guess that's what it is. Like I'm talking and talking, but I'm just
Yep.
like, it's communication.
Communication. And let me try to break down the formula a little bit from a high level for the start, scale, exit, repeat process. Because if you look at the book, Start, Scale, Exit, Repeat, we have a start section, or a scale section, an exit section, and a repeat section. And in each section, we break it down into story, people, money, and systems. So it talks about the story that you want to create when you first start a business. It talks about who you need to hire when you first start a business, how much money you need to get to your first stage gate. And a stage gate is really a point in time where you said, we're go or no go, we're pivot or kill it. And that's what we do. If you start a new business, we always set up a new stage gate for that business. And then systems, what are the systems you need to put in place in order to start your business? Early on, systems we're much less reliant on systems. But one thing I do encourage all startups to think about when they first get out are the KPIs, the key performance indicators. What are those key performance indicators that can help drive your business? And if you're not tracking them, it's like flying an airplane in the fog. You can't see unless you have the indicators. So we're going to want to have those key performance indicators. And then as we begin to gain sort of success with the startup, we want to think about scaling that startup. And we look at the story, people, money, and systems all over again as well. And in the story, people, money, and systems, we have a very different situation than start. So in story, you're looking at the change in the way you sell your business. Now go back to Amazon, for instance, back in the 96. Remember that, Michelle? Amazon? Like they were just a book selling company out of a garage. And then they decided to change the story. Remember Blockbuster? They tried to change their story, but they didn't. The Netflix actually was in the business of distributing DVDs, and actually, sorry, Blockbuster didn't try to change the story. Netflix tried to change the story to become the business of entertainment versus distribution of physical movies, and Blockbuster didn't. And you can see what happened between two different companies, two very successful companies. And the next is the people. Who are the people we need to hire to get 10x and add three zeros to our company? If we're at 1 million, how do we get to 10 million? Who are the people we need to hire and what are their personality profiles? And then the money, there's the right type of money for the right situation. That's what we want to look at when it comes to the start, scaling your business. And we have a really cool chapter in the book, Start, Scale, Exit, Repeat, for that. It breaks it down in the US. Believe it or not, venture capital is not the number one place to turn to. For most companies, the vast majority of companies that are in the Inc. 5000, you never guess this, but 90% of the companies, Michelle, right, in the Inc. 5000 are do not receive venture capital. They're self-funded, they're funding themselves, they're on their own. And then systems again. And the systems that you implement in scale are those things that may not be so instinctual to you in start. I'll be quite frank. And back in 2006, I was running a publicly traded company, and we were running into a lot of challenges. We had actually flatlined our revenue. We began to have analysts turn on us. The board of directors, I had a board of director come to me and suggest that we need to hire a professional CEO. And our IPO price, we were trading below our IPO price, and we were having fights with the partners and whatnot. So it was a real mess. It wasn't until at that point when the board member came to me that I called a lifeline. And it was a friend of mine. He said, "You got to meet this guy named Patrick Tian. He runs a company called Rhythm Systems." And I went to Vegas. I flew in. I'm like, I don't want to do this. This is something that I just need to get the board off my back and make it look like I've got some professional management techniques or systems. Can you just give me that? He says, "Well, you're going to have to meet for 2 days a week, sorry, 2 days a quarter, and then have weekly meetings, and then daily huddles and profiling of new people in the company, new hiring systems. You're going to need to implement goal setting, a 3-year goal, a 1-year goal for the company, a quarterly goal for the company, and you're going to also need to have individual goals." And I said, "There's no way my team's going to do all this, my executive team. They're going to balk. It's too much work." And he said, "Look, I'm not going to work with you. This is like akin to going to the doctor and saying, like, I want to lose weight, but I don't want to change my lifestyle. I don't want to change my eating habits. I just want to take the pill." And the fact is that's not the solution. And Patrick said to me, he goes, "Colin, I'm not going to work with you. We're just not going to work with your company." And I said, "Okay, well, what do I have to do?" And we did it. We did the 2 days of strategic planning. We did 2 days of strategic planning, 88 days of execution. We did the goal setting. We did the daily huddles. We did the hiring processes changes. We did core values. We did a lot of things. I've articulated a lot of those in the book. And I was amazed what occurred. Within 90 days of implementing these systems, we began to see the company grow again. I remember also, Michelle, about Patrick would say, "You have to stretch the rubber band." And so we would do migrations, website migrations with telecoms. And, one quarter we're just saying, "Well, we need to do 15,000." And we're like, "It's impossible. It's impossible." So we ended up pushing hard. We did the 15,000. And then he said, "Okay, the next quarter, you need to do the next." And it was easy. So once we did 15,000 once, it felt easy to do 15,000 the second quarter. But then we decided we'll push for 20,000. And it was this kind of coaching that we brought in, this kind of systems that helped us scale that company. Within 3 years, we tripled our size. We sold for 17 times EBITDA to a Fortune 500 company. And the stock price that we sold at was 130% over the prior day's closing. And I remember sitting in the boardroom with the CEO, and there were like 20 people in this boardroom, huge boardroom, this Fortune 500 company, doing a presentation of the systems that we had implemented at Hostopia. Hostopia was the company. And we were able to do this presentation. And he points at the presentation, points at me, then points at all the rest of his team. He says, "Guys, this is what we need to bring into our company, into this Fortune 500 company. This is the kind of culture that we need to bring in, this culture of growth, this culture of success." And if you tell me, like, years before, I just thought entrepreneurship, business was just you go at instinct, right? You follow your instinct. I didn't realize that there was a lot more to it. And you do get to a certain point, you're not going to continue to grow unless you have the right systems. I'm not saying there aren't extraordinary examples out there where you have a Steve Jobs or an Elon Musk at the helm. But for most of us, the reality is if you want to scale your business, you really do need to scale it by using systems and being comfortable with those systems. Michelle, before I jump into exit and repeat, smart story, people, money, systems, do you have any thoughts on like some of the or stories that you could talk about with respect to the systems that we brought into? Oh, she's taking a phone call now. Okay. It's a live app. This is Clubhouse. We're on Clubhouse. It's a live app, and things happen on this app. And Michelle, was that
No,
saying
I'm
if you
not
have any
taking.
stories that you could
I'm
share
not
with
taking.
us?
Yeah, I'm not taking a call. It was ringing. I didn't take it.
Yeah.
But, one thing for me is it's really hard for some people to come to a meeting and they have a hard this is weird, right? For people like me, it's not hard. So it's weird. That's why I say it's weird. It's not my personality. But for some people it's really hard. Like they don't know what to say. It's so like to me that's weird, right? Because I like to talk a lot. But they'll be like, okay, we like to start off the meeting, like, tell us your three victories, right, from the past week, the three things that you're working on, okay, and whatever three things that you're stuck on, right? Just like keeping it very succinct. And sometimes people really, really struggle with that, Colin, especially surprising, like talking about their wins, okay? So, the one thing that I've really learned working with teams and myself is really don't discount the little things. These little things are what make us progress. Okay. It doesn't have to be, oh, I landed $1 million contract, Colin. It could be like, oh my gosh, we found this whatever glitch in our, shipping tables that was, charging some people more. Well, that's a win. Like for me, it's like I'm really into like what are the micro moves, because I used to sit around, I'm not 30 anymore. I used to sit around in my 20s and 30s and think like, oh my God, I have to think of the like best, smartest idea. Like I have to figure this out. I have to figure this out, like the big idea. It took me a long time to personally realize like that's not what life is about. Or business, right? And to me, life is business and business is life. It's about how you're improving things every single day. Okay. So it's the little things. I'm not trying to invent fire, right? You know what I mean? Of course, that'd be amazing if that happens to be my trajectory. But it is also like, how do I make something maybe that's a little bit better quality for someone that is it costs a little bit less to ship because the package is smaller. To me, that actually I make that mean something. It's better for the environment, it's better for people. Like don't discount your little ideas like I did when I was younger. And then I'd be so upset afterwards when somebody else did it. And I'd be like, oh, shoot, I should have done that. I wanted to do that, but I didn't do that. Like that's the worst feeling that you can ever have in my belief is to feel like you really like you should have done that and you really messed up. So I think we really have to lean into the good things of every little thing. That's how you build momentum, Colin. Like that's how you do better. There's this saying, I don't know how to say it. It's like how do you do good by doing better, right? It's like a self-perpetuating thing. It's also about ourselves believing that and really believing it, because if we really put it out there and we believe it, things, most often time do get better. Colin, back to you.
Yeah, and I was just conversing with our guest who was supposed to come in today, who's having an issue downloading the application. He's saying that it requires permission to access my 2000 company contacts. So he's a little bit confused. We're going to try to reschedule him for when he's able to get the app installed.
Usually that's you say no, I don't want to do that. All
Yeah, I
apps.
know. That's what I thought. That's what I thought too.
I think
Yeah.
all apps are pretty much that way, right? They have to ask you permission, and you can decline.
And I don't know, maybe if you want to check that out. And I know you're trying to work in the back channel to get him in here. But we are a live show. It is Clubhouse. Yeah, it is an app. And you're probably listening to some podcast and you're like, wow, what's going on here? We got the guest coming in. We don't have him coming in. But that, that's sometimes that happens. And you might be in the audience and you can relate to the topic that we're talking about today, which is the patterns of success, the patterns of what it takes to become a serial entrepreneur and win over and over again. And we'd like to hear from you. We know we see a lot of regulars
Yeah.
coming down. I see Doctor and Renee and
Well, Renee
Jason
has
and
had a lot of really interesting comments in the chat, and I just invited him to come up, and he's graciously accepted, and I'd love to hear his thoughts on this.
Yeah, yeah, I can tell you when I learned about systems, like Colin. So as an entrepreneur, I didn't understand systems, and then one of my people. I want to give it two examples so people can get the flavor of what it really means to have a system and what it means not to have it and the difference. So we're talking the 80s, early 80s, 120 service people across the country, and my person in charge of field service. We had 400 people in a public company. So the person in charge of field service, what they organized was the service techs would go in the field, find out what was wrong with the computer terminal in the field, be back by 5, send a message to the head office overnight. So it could be shipped, the part they needed could be shipped overnight, and the next morning the service tech went back to the client and with the right part and fixed the device. So that's really the epitome of service, when you can go somewhere and get the part the next morning and go back to the client. That required a system of communication of a service of service people being back at their office a certain time, of shipping taking place overnight, and then the service person having the part to go back to the client. And so you saved a day, 2 days of a client waiting, and you looked really good because the system enabled the process of, of giving outstanding service. Then 1989, I discovered how this fellow Stewart grew the company MCW to $300 million in 3 years, selling the IBM PC. What he had in his company, process wise, was groups of people doing different functions. But the people doing data entry had to perform at a certain level that the next group that depended upon the results of what they were doing could do their work immediately, and it would go on consecutively across teams, so that he organized the people to do functions that people had no choice but to perform, because other people were depending on their results of performance to do their job. And so it became, I witnessed a high pressure environment, which isn't great for the people. But I learned that there are systems where if you organize the processes, one group can do a function, but they're sadly they're pressured to get the function done with excellence and quickly, because the next group is waiting, and that goes on throughout the day to the next day. And it's again efficiency of processes where people depend on each other to do their job, and so the people are forced to perform so the next person, their peer, can do their job. So it's sad that it took me so long, like 15 years before that, to understand the concept of processes, because I never worked for any company. I worked at the National Film Board, but they gave me total freedom at the National Film Board in Montreal. But I never was forced to have a discipline. And so when I created companies, the companies I created had no processes because I didn't understand what Colin was talking about, that that you need different types of people for different size of organizations at different times. And if you haven't been in a company that has processes, you depend on other people teaching
Oh,
you.
all right. I have a question. Okay. Because this is really, really good, right? again, because I'm one of those people, I believe everyone is intrinsically good and wants things to go well. Okay. Like who wants like a bunch of strife and bullshit in their life? I know I don't, and I don't know anyone else who does. But so you said what you observed is what is classically called a bottleneck, is like people were waiting on someone else. So like there's, oh gosh, that's like a month conversation in itself, Renee. So I'm interested in a very kind of like concise way. How did you deal with that? Because that's going to happen. Okay, let's just accept that is going to happen. How did you deal with that in your processes without being overly rigid? Because I've been the person who's walked into the company and done the Gantt charts and done the milestones and all the dependencies and all this stuff, and then no one looks at it. Oh gosh, no one looks at it, and still people are sitting there, and you're thinking like, okay, we're all grown adults. Why are you just sitting there? Like why can't you figure out something else to do or be part of the solution? And that's the other part, is like you don't want to stifle people from being, let's just say, entrepreneurial even within an organization. So like how did you manage to that challenge?
So in the in my public company, I just simply was lucky that I hired actually three different people who understood operations. I didn't. And so they're the ones who implemented the operations, and they don't have to necessarily be creative people. They just have to understand the concept of operations. In the cases of observing the other company, it was just an eye opener to see that there are people like that that excel at knowing how to run an operation. Doesn't mean that they're innovators, but they can build tech companies at certain stages of growth. And I still am a lousy administrator and I'm a lousy operator. And I don't like, at this stage of my life, I don't like having employees or people. So I have to do my own business models around creating value through
Right.
IP, patents, and
Yeah, I mean, there you go. Like something you said, Colin, this makes me think about, personalities. I don't really like the word profiles, but just like personalities and behaviors, is like some people, like you said, they are particularly adept at dealing with uncertainty and making people also feel comfortable. For me, what I have found is it's a lot about making people feel comfortable around the uncertainties rather than like, okay, here's XYZ date and you didn't do it, and why are you sitting there and what's going on? So I get what you're saying, and I do think it is, even though it's operations, which we all think of as very technical. And, I have a lot of friends, like my friend Dawn down here that, and Kyle, that do operations. Is a lot of it is in the soft skills and giving people space and really knowing when to press. But Colin, like, what are your thoughts on this?
Well,
Like,
Renee's like I understand where Renee's coming from.
yeah,
I think if you were to interview 100 entrepreneurs, 99 would say this is the way they like doing it, and this is the way that they're going to continue to do it. If you look at actual statistics, the number of companies that actually scale in America or globally is less than a couple percent. That the reason why they don't scale is that the entrepreneur, we're getting a taste of that with Renee here. I'm not picking on you, Renee, okay? But I know we love you though, right? But the entrepreneur, it limits themselves. And I don't care how successful a company you are, and this may be the case with AI, where we're gonna see a solopreneur reach $1 billion market cap one day. But the reality is, you need people. You need people to scale, and you need great people, and you need great people to lead, and you need to delegate responsibilities, which means stepping back and allowing them to manage and run those things. There's politics. There's a lot of challenges when it comes to this kind of stuff, and I understand where you're coming from, Renee. I totally do. Start, scale, exit, repeat is not a formula for everyone either. It is a formula that, it's a methodology, an ideal of how to create wealth by going through the processes. And it takes a lot of internal changes as the entrepreneur to go from start mode to scale mode. And then it goes, and then you're going into exit mode. And again, I want to talk about those four areas: the story, people, money, and systems. In exit mode, it changes all over again. So you think you got it, but then in exit mode, you begin to change your story again. You begin to change who you are again as an individual. And I'll focus on that. I'll focus on your role in an exit strategy. Your role in an exit strategy is even more stepping back than you did when you were scaling the company. You were hiring other people, you're delegating responsibilities. Now you need to delegate the company. You need someone else to run it, or you need your management team to run it. You need to check your ego at the door. You need to step back and you need to get the heck out of the way. A lot of buyers look at companies and see a higher value if they're professionally run. If they're run by the entrepreneur, there's a discount that's applied to that value. And there's a fact to this. When I was at the Fortune 500 company, I continued to be CEO of my division, my company, and I acquired about 10 companies following in a 3-year period. And there was not one of the companies that we acquired where the entrepreneur actually stayed on. The exit rate for entrepreneurs post acquisition of a company is extremely high. I don't actually have that percentage in front of me right now, but it's extremely high. And investors know that, buyers know that. So what they're looking for is, if you want that 17 times EBITDA, well, they're looking for a Swiss clock. They're looking for an executive team they can move over and then actually scale with that team. The company eventually merged into the other company after I had left. They merged it completely with the other company, and a number of my executive team members became executives in the larger company as well. And I was happy to see that a lot of people made a lot of progress in their careers after the company got acquired. But so I'm telling you, when you exit, it's a whole different mentality, and you've got to mentally make that shift of step back, give other people's credit, in fact, promote your people, demote yourself, and actually you'll sell the company for a lot more because you did that. And this is just part of life. This is just part of the way companies are bought and sold and whatnot through private equity. But then, so we talked about the story, the people, the money, and then when you're in the exit mode, you're in negotiation mode. You got to be very careful here, because I spent 10 years building a company in the 90s and 10 weeks screwing it up on exit. We got to over $1 billion market cap. The company was an ISP in Canada. It was the third fastest growing company in Canada at one time, the seventh fastest growing company the year after, or the year before. And we went to exit the company. Again, it was publicly traded too, and it went to over $1 billion market cap. And we screwed up on exit. And you know what? We there were two mistakes that were made on that exit. One is we agreed to a lockup. So sometimes when you have these publicly traded companies, you have to agree to lockups. And we agreed to an 18-month lockup, but we no longer controlled the company. And something happened in March of 2000. That was the dot-com crash. And when that happened, man, oh man, we saw the stock market drop from the NASDAQ went from 5,000, Michelle, to 4,000. And the powers that be that controlled the company that I had started had decided that they'll pull the $50 million offering that we were doing at the time and wait until the market improves. Well, if you don't know anything about that time, the market went to 1100, the stock market, and on the Nasdaq, and it took almost 10 or 15 years to recover. Needless to say, the company filed for bankruptcy protection. Jason, you might remember the company. It was not Two Cows. Sorry, that was the other company we started in Canada. It was a company called Internet Direct, and then it became Look Communications. That was the first mistake. The first mistake was we gave up control without having liquidity. So one of the chapters in the book, Start, Scale, Exit, Repeat, is liquidity or control. And the second mistake we made was that bad things do happen. And that is the thesis for the book. And that's where the whole genesis of the book came from, was this idea that you should start, scale, exit, take some money off the table, repeat. It really was not something that I just it wasn't something that I learned about. It was something that I experienced, unfortunately. And I lost over $100 million, probably about $130 million when I was 29 years old. It was 98% of my wealth at the time. Mark Cuban sold his business at that time for a similar amount, but he had liquidity, and you see where he went. Don't get me wrong, I'm very lucky, and fast forward 7 years later, we took another company public, my brother and I, and that's the company that we sold for 17 times EBITDA, and this time it was all cash. So like, it was all cash. And then lastly, systems, sell your systems. I told you the story about the CEO who turned to me and said, "Look at this company. This is the kind of culture we want to bring to our company. When you have a Swiss clock, you will get a premium for that sale." I will finish it with repeat in a few minutes, but I do want to hear from you, Jason. Jason, my fellow Canadian who's come on stage bravely to talk about it, patterns. And are there patterns you've seen in businesses that succeed, or or even failures that you see people make the same mistake over and over again? Jason,
Yeah, my audio is cutting in and out, so tell me if
you
that
sound good right now.
happens. Okay, great. You know what, Colin? I think it's amazing, and basically what I said in the chat is that business is a lot more like, I know you wanted to relate it to subjects in school. I find it's a lot more about knowledge and action, like, say, something more predictable than, say, getting a hit song, right? Like a hit song, like just somebody might just have an amazing talent, and it's not really easy to just say to you, Colin, okay, you know what? Well, I saw Prince do this amazing thing. Like, I want you to sing a hit song. Like, that is more, I think, or maybe even another example, analogy, like, it's more something that's learnable and you can apply than something that's just random, right? So I do think that it's more valuable, for instance, to read, like, and your book shows that. I didn't know those things when I started my business. I just had no idea, like stage gates. That's a very effective way to see whether you should even continue to the next step, or, seek investment or whatever, right? I didn't know about that. And I studied business at University of Toronto, and I graduated with distinction, Colin, and
Hey,
I
both
didn't
of
know
us. I
that.
was at U of T as
Yeah,
well and
yeah, right.
graduated with distinction. So yeah. And you don't know this shit. You don't know what the hell you're doing when you start your business, and a lot of it's based on instinct, and that's okay because that instinct gets you to start the start gate. But there's so many entrepreneurs that self-destruct when they start moving forward. And I'm giving you another story here. I invested in I'm going to leave this one nameless because I don't want to offend the founders. It was a jewelry business, and I invested in this company, and they were all 22, 23 years old. Four of them that jumped into this business exploded, went to $10 million in sales. They were becoming quite a significant brand, actually. And they tried to scale the business, but they ended up self-destructing and going bankrupt only 12 months later. So how do you do that? How do you go from 0 to 10 million, self-destruct, and go bankrupt or 12 months after you get to that level? And there were a lot of things that occur, but I'll tell you this: there were no planning, there was no strategy. It was ad hoc. They hit some gold, they found it, they tried to leverage it on it was early days of Facebook marketing, and ads were cheap, and so they were able to get it out there, and they were making their products cheap in China. Whatever it was, they had some early success, but then it just imploded. And I go back and I look at what happened in that case study. It really was, there was no one in charge, first of all. They did not have any scaling strategy. They did not have any systems, any coaching, any third party coaching. I never had the opportunity to get in there and help them out until it had all fallen apart, unfortunately. And and it was sad to see that you can have this success and then it can just go off the rails if you don't have the right systems in place. And Here's the funny thing about this story is the four of them, each of them went off on their own, and individually, at least three out of four of them have been very successful. And I would say four out of four were successful too, actually, now that I think about it. And I think that where there was too many cooks in the kitchen with that particular company, and you really do need to have one person leading it, but that one leader needs to have the learning gene, the listening gene, the gene of what it takes to understand how I need to change as an entrepreneur, or how I need to inspire others, how I need to lead others, how I need to learn how to delegate responsibilities and not just tasks. These are the things that you need to learn. And you're right, Jason. I didn't learn it. I had major in commerce at the University of Toronto. I didn't learn any of this stuff. And if I had a book today that I could read, like Start, Scale, Exit, Repeat, as sort of a basis, I would have loved that. Now, there were a few books back then I did read, like Jeffrey Moore's Inside the Tornado and Crossing the Chasm. I love that book. And there are obviously a few other ones like Seven Habits of Highly Effective People and, Think and Grow Rich. There were some other books, some classic books I did read in my early entrepreneur career, but I didn't really have that sort of like prescription. And I know in the book Start, Scale, Exit, Repeat, we really do break it down into a prescription of what it takes to start a business. And then we added the official workbook, which is $10 on the internet, which is a physical book which has GPTs and everything that help you get your business started. And it has the ultimate startup checklist. Like you literally could just check one off at a time. And I'm not talking about going out and getting bank accounts and that kind of stuff. I'm talking about, you know, picking a domain name, getting a trademark, those kind of things that are a bit more sophisticated, the strategy elements to starting a business. We actually have something called the 4 sticky note business plan in the book and also in the workbook, where you can actually lay out your whole strategy on 4 sticky notes on the wall. And ironically, when I wrote an article for Forbes, Michelle, that was like the number one article that I've ever written for Forbes, had 17,000 views. I don't know why that was so popular. For sticky notes. But the patterns that exist, the formula to succeed in business, it is not something that is completely natural. And I think that people fail to scale or they fail to start a business and they think, oh, it's because I'm not an entrepreneur or I'm not this or I'm just who I am. But that's not the case. We all have to learn. All you need to have is the learning gene, and then obviously you need to be able to implement that. And I will add, you need to have that driven. You need to be able to drive, like always drive forward every day. Be proactive. Then I think that's the number one habit in Seven Habits of Highly Effective People. Be proactive. Every day you wake up, you're saying, "How can I make more money? How can I move this business forward? How can I stop these problems? How can I?" You're always you have to have that what we call in the disc profiling the dominant gene, as well. You have to have that. But when you do figure that out and you do have that learning gene, and able to learn, you're able to understand, you can start a business, you can scale it, you can exit, and you can repeat. Now, I will finish with repeat in a few minutes, Michelle. But if anybody wants to sort of popcorn style here on stage, come out with any thoughts so far or any questions, I'd be happy to answer them. Michelle, I'll roll. I'll keep rolling.
Well, no, I'll ask you this, Colin.
Go
I
ahead,
think it's very
Jason.
important.
Yeah.
I'll just say myself, I was too immature to take advice as well 2 decades ago than I am now. Okay, like so what I would say is there are a lot of people down there listening. They'll say, I can do that anyway without reading a book. Okay, look, if they're young, if you're young, look, if you tell if I don't I help young people, right? If I tell a 16-year-old the same thing as I at the 16 when they're 46, okay? Even me, if you told me the same thing at 16, I would say it doesn't require all of that.
Oh, and
Okay?
the other one, you get this all the time, right? Okay, I don't want to pick on young people here. I mean, they're the number one buyers of my book. It's number one is between 18 and 24-year-olds. But there's a lot of, it's a TikTok world we live in, and a lot of mentality is, let's get rich quick, and we just need to find this hack. And if we find this hack, we can make money on Amazon and sell it. And it's all about the hacks. And it's not about building a foundation, a solid foundation of your organization, your business, and then actually growing it through distribution channels and traditional marketing. And there's a lot of what's old again is new again, whether it's reviews, whether it's awards, it doesn't matter. It's been around for many, many years. And I'm asking, so Jason, so you're saying you're smarter today than you were when you were 16. Is that correct?
Well, it was just wiser. Okay, it's I would
Wiser.
say
Okay,
use the
so you're
word wisdom
wiser
because I
today
say
than
there's no such thing as smart or stupid.
yeah,
It's
you're
just
right.
paying
So
attention and
yeah.
not paying attention, right?
So you're wiser today, and now today you're like, oh, I need to read that book. But when you're 16, you're not. You're right. There's this sort of mentality.
I failed for a decade, right? I didn't know these things, but I think that when you're young, you don't even think you need to know the things. The guys on people on TikTok, they were like, "Oh, you should make it." They listen to my song. You should put that song on TikTok. You'll be a millionaire, a multimillionaire. I said, my song is on TikTok, and look, they think that you can do one 3 minute video and make millions of dollars overnight just from one good video. Colin, it's ridiculous what young people think.
Yeah, I mean, it's the mentality, but this the fact that you get to a stage of wisdom, which tells you that you should learn from others to increase your wealth, is a it's a watershed moment for every entrepreneur, every individual. And I know that when I was young, I wouldn't listen either. And yeah, we did okay to get to a certain level, but I ended up losing $100 million because I didn't have anyone around me, or I didn't have understand what I was doing, and I just thought I just had the right judgment or instinct, but I didn't. I obviously screwed it all up, and thankfully was able to get it back going, and then thankfully I was able to get coaching and help to help scale Hostopia and then sell it for a huge multiple, and then Dot Club and Geeks for Less and all the other companies that I've helped co-found. Start Two Cows, another one. All right, so the last section of the book is called Repeat. So we've talked about Start, the story in Start, the story in Scale, the story in Exit, and now the story in Repeat. The story in Repeat is ideas are everywhere again. So in the first chapter of the book is ideas are everywhere. You just have to look out for them. And I get into detail in the book about how you can identify opportunities when you're in the thick of it. And this sort of it goes for anyone who's even working for a company right now, right? When you're in the thick of it, when you're in the middle of it, opportunities are everywhere. When you're binge watching Netflix at home, the opportunities are nowhere. Okay? So a lot of people ask me, what's the best thing I can do to start a business? I say, go get a job. That's the best thing you can do. And so in Repeat, we talk about ideas are everywhere again. With people, we track our A players. We don't steal them from our prior companies. What we do is we track them. I use LinkedIn to track most of my A players. And I would say there's a good chance if I got an A player, I'll be hiring that person, at least 50 or 60, 70% chance I'll be hiring that person again down the road at a different company. And then with respect to money, we're going to want to turn ourselves into a brand. So when we as entrepreneurs, if we've been successful, we can turn ourselves into a brand. Even Colin, I did it with Forbes. Told me I had to change my name to Colin C. Campbell. There are too many Colin Campbells. Now you can see me on the front page of Google if you type in Colin C. Campbell. You need a kick-ass LinkedIn page. That's number one. I think everyone does. I don't care, even if you're not in the repeat section of life in business. You need a very, very good LinkedIn page. In fact, I think that's something you can spend a little bit of time on that could have a huge impact on your life and your career, and even with business for raising money or setting up your reputation. If you can do it, get a Wikipedia page. If you've had something notable that can get you onto Wikipedia, that's a good one to try to get. I was lucky to get that one. It's hard to get, I understand, because the no bit notability requirements, but that's something that can make a difference for when you try to dress for success. And then lastly, systems. Just cut and paste your systems. Do what you did at your prior companies that worked and do it again. And now I have 20 companies in my incubator, roughly, that I've invested in. Some of them are physically here, half of them are not there, but I sit on the boards of those companies and whatnot. And we've brought a lot of our systems into each of those companies. And we've helped those companies scale, and we've helped those companies grow. And we're helping those companies exit. I'm actually working on a couple deals right now. So we're helping those companies exit as well. And that's the philosophy, is that story, people, money, and systems will change as you start, scale, exit, take some money off the table, repeat. All right, that was a lot. That was an ad hoc show. Never planned on having this show at all. Just sort of came out. We talked about the formula. We've got only a few minutes left here on the show, and this will also be an article on Startup Club. Every show that we do now, Jason, this is pretty cool. We actually write an article using AI. We take the transcript, so it's raw and real data. It's raw and real information. See, Google and all the LLMs, they want to see raw, real content. And when you do a podcast or you do a show like this is raw and real. And you can pull that, put it into an article, edit it. I usually edit it pretty extensively myself and add my own thoughts and personality to the article. But we're able to do that, and we get on the front page of Google almost 100% of the time for the terms that we're trying to get on the front page of Google for. And it's been a very successful formula. We're actually doing a test with some fellow podcasters. We're doing one test. We're trying to get that one out there, and we'll see how that goes as well. But if you have raw, real content, you can actually amplify it, and that's one of the ways we do amplify the content here on the show. And the articles are really good, and we really do spend a lot of time. I know Mimi spends a lot of time on editorial. I know that I write for now. I'm writing for now for Forbes and for Entrepreneur Magazine and for Startup Club, so I pretty much have my hands full. But we are opening up spots on Startup Club for contributors who want to write articles. If you have an expertise in any particular area, and you want to share that expertise with the community, the startup club community, we'd be happy to have you write an article or be a contributing author. Just email hello@startup.club, and Mimi has a whole process to get you onboarded as a startup club contributor. And we're now going to be posting the names of those contributors on the website as well. If you do want to be a guest speaker on a show, you can also reach out to Mimi at hello@startup.club. And we love interviewing people for these shows and turning them into podcasts and replays and articles. And, we found a sort of a unique formula. And I know Clubhouse is difficult to work with. I know we had a guest today who just couldn't get the app up and running and started, and it has gone through its gyrations, but there's something special about a community of people who come together, and we share, and we solve problems together, and work on ideas of how we can build wealth, how we can crack the formula of what it takes to become a successful serial entrepreneur. And that's what this show is meant to do. And thank you everyone for listening to pretty much my diatribe the whole time, and Michelle's advice, and Jason and Renee for coming on stage. Thank you very much. And we'll see everybody next week. Any last thoughts, Mimi or Michelle?
No, I think this has been good. And, sometimes these less structured, a little ad hoc actually works, Colin.
Well, when you're thrown in the fire, you got to sort of like
Yeah,
dance,
it's not like
right?
we're making it up. It's kind of
No,
like
I
what
got
we,
to, it's like, okay, we know the topic.
right.
Let's go with it. Let's roll with it. We just don't do a traditional podcast format. We do a live show. It's like mini radio. And what's cool, if you're listening to a podcast or in replay, just come to the show live every Friday at 2 o'clock Eastern and join us on stage. Ask a question, be part of the community. We love to hear from everyone, and we love to share. And I know that there's a lot of people who've done a lot of great things in this world, who, if you can come on stage and share, you can really make a difference for others as well. Well, thank you very much. Again, we'll see you all next Friday, 2 o'clock Eastern.
Thank you. Have an amazing weekend.
Bye for now.